Hello and welcome to the ByteTree webinar. I'm very pleased to have a guest today, and that's Jeff Boccaccio, who's the founder of Rfactory. He's also, he has the dizzy heights of achieving board membership at the UK Society of Technical Analysts. So a very, very good guest for us to have to talk about ByteTrend. He's also my boss, because he's the chair of the Society of Technical Analysts Investment Committee. So congratulations on that recent appointment. I think I've been on that committee for a few years, but I managed to bypass being boss. But anyway, welcome, Jeff. Could you just tell us a little bit about yourself?
Sure. Yeah. Well, first of all, thanks for having me. Really excited to talk about ByteTree and all the good things happening there. So yeah, I am originally from the States. As well, they grew up on the East Coast, university at Georgia Tech in Atlanta, moved over to Switzerland with Deloitte for UBS, joined UBS, then Barcap, and sort of left that to trade for myself along with my partner, and we started up Rfactory just as a vehicle for us to share some of the tools that we're using ourselves with others who just like the sounds of them. And also we build indicators, systems, automation, all that sort of great stuff. And technical analysis forms a strong foundation for all of that, hence the link with the STA.
Great. So you've got a background, you came from the city, you've done your time wearing a suit, going to work, waking up early and all that, and you've done your own thing. That sounds familiar to people around here. Okay, so let's talk about the world. Markets, it is late October. October is always a scary month for markets, particularly when they're below the 200-day moving average. And 2022 is a pretty notable year, as we have this big transition out of ZIRP and QE into something else, which we're not quite sure what it is yet. But basically rates up, bonds worse than equities, which is not something you hear very often. So what's your take on what's going on?
Well, it's interesting. I mean, we've been talking about bear markets for a while. We've been risk off on a lot of our longer term strategies. And I'm looking over here at one of my charts just to get a current read, right? As we look at it now, the S&P, just judged by the SPY ETF, is down at just over 20%. I think that's as of last night's close. So, we are still sort of firmly in bear territory, but we've been messing around down here for a while. We may be basing a bit, and I don't know if this is a dead cat bounce here or if it's got a bit more legs to it, but maybe, a bit more, or maybe I should say a bit less uncertainty with sort of some of the geopolitical factors maybe starting to kick in. So maybe the UK is starting to find its footing. The pound has recovered a bit. Bond yields have recovered a bit. So yeah, I don't know. I am bearish but optimistic and starting to maybe just probe long side on some of these equities.
I think on the UK, because it's had a very, very bad event recently, you've kind of caught up with the bear market, so that buys you a bit of time. You might have to rejoin the bear later on, but,
right.
but the sort of short-term low, the UK is a sort of relative safe haven for a bit, and I think it would be over-optimistic to say it's going straight to the moon. But let's talk about this bear market. I mean, it started in Feb 21 with that was a sort of peak game shop and the sort of art fund and the sort of speculative no profit tech stocks. Ironically, crypto had a sort of second camel hump later in the year before it started dying, and the fangs carried on even longer. And you could argue that some of the high quality defensive stuff has been hanging around and that sort of thing. And as always with bear markets, there's always something that appears to be a safe haven. Right now it's energy. Perhaps we'll come to that. But what do you think of the bear cycle? I mean, this stuff that peaked in Feb 21, I mean, that's pretty long in the tooth. It's been falling a long time. There must be some opportunities appearing by now.
Yeah, like you said, it's been a while. And, we've hit a normal sort of drawdown area. What do we get to? Not quite 30%, but, we've been down here for a while. We've had our eye on energy, for a while as well. And that was one of the things that was really just firing from our longer term sort of relative momentum angle. That was just sort of at the highs for a while. So we've been monitoring that. But as you know, that sort of had its own little correction recently as well. And now it's having a bit of a resurgence. So yeah, I'm thinking that, a splash back into energy or energy stocks is possibly on the cards here for us. So yeah, just keeping an eye on it.
Sure. I think I just had a little idea. We should create an indicator called the 90% club. The 90% club, of course, is all the stocks that go down by 90%.
Yeah.
And that number is growing. We should actually measure that over time so you can see how mature bear markets are. Percentage of market that has touched 90% down.
There's a lot of those stocks that IPO'd, like sort of in the post-COVID surge, and were the darlings at the time. You know, many of those like tech stocks, you know, a lot of them are down close to 90, right? Or at least, you know, 75, 80, 85, something like that. And, you know, as you're aware, they're probably just targets for private equity buyouts. Those guys are all on the sidelines waiting to pounce, I think. So yeah, interesting times.
And that's, of course, when technical analysis is not at its best, deep value investing. You've got to try something else.
Right.
Okay, look, I'm going to share a screen. And I think I'm right in saying, Jeff, that you're very happy to talk crypto. Of course, we could do TradFi or we can do crypto. But I think that since you're an intelligent person from the old world who likes crypto, that's always an opportunity. So I think we've got to stick with that. Look, very briefly, I'm going to explain what ByteTrend is. I know you know what it is, but some of the audience may not. And these are the you know, you've seen CoinMarketCap and CoinGecko and Crypto Compare, and you get a list of coins with some columns and live prices. We don't do that. We're just looking at the trends here, because I always found it very, very confusing. Look at lots and lots of tokens and having no idea how they fit together. You know, it's very normal in stock markets to think about relative strength. Where's the leadership? Where's the laggardship? That sort of thing. And so we just wanted to build that simple overlay. So Jeff, I'm just going to patronizingly explain to you how a chart on ByteTrend works. And this is in US dollar terms. So we're going to choose Ethereum at random, just because it's high up the list. And very simply, that's going to load. And we'll zoom into 3 months so we can actually see what we're doing. And basically, what I'm going to do is deconstruct the chart, take everything off, and I'm going to put it back on. So that is Ethereum in dollars. Dead simple so far. There's a 280-day moving average. Jeff, you know why it's 280 days, don't you?
I was going to ask you, because I realized, I've got a theory, but I realized that when we're on the ETF side, and I don't want to confuse things, we're using shorter ones, right? I think it's a 200 on the ETF side, and I'm assuming that you're adding in a bit more time because crypto is trading 24/7.
You've got to get up pretty early in the morning to get ahead of Jeff. So 10 out of 10, well done. And I don't think you cheated. You didn't know that, did you?
No, I didn't know. I was actually going to ask you that. Yeah, but I had
seven over 5, 200 times 7 over 5. Because I mean, we had this conversation, and funny enough, Nick Lydon, who's a well-known technical analyst, he said to stick with 200. But I said, how can you have a chart of Bitcoin and a Bitcoin ETF and they be different? They must be the same. They must be equalized.
Very good point.
So that's why we wanted to do this. So that was my logic, and but people can tell me I'm wrong. I don't mind. 30-day moving average becomes 42. Mm-hmm. So what are we doing here? We've got I've been talking to you and not paying attention to what I'm supposed to be doing. So that 200-day, 280-day moving average is negatively sloping, and the price is below. Okay, so had it been above, we would have got a point for each. In this case, we've got a negatively sloping 30-day or 42-day moving average, and it's above, so we get 1 point out of a possible 2. Yeah. And then the final thing is we've got max min lines, and I'll take the moving averages across. There's a fly. Thanks, fly. And because the last touch was a high, so those two lines follow the 20-day, the 20-day high and low. And because the last touch was a high, we give that a 1. So we add all that together. And I'll turn everything on, and the score in the background, and we get 2 points. So if we wanted to have 5 points, we'd have to be above the moving averages. They'd all have to be positively sloping, and the last touch would be a high. So let's go and find one. I think we can probably do that. If we just switch to Bitcoin, if we now look at ETH in Bitcoin, it may actually be a 5. Actually, it isn't. I know it isn't. It's nearly a 5. It's a 3. So
it could be after today. It looks like we're having a bit of a surge today.
After today. Yeah.
Yeah.
So let's go and find another one. That's cheap. And the reason we do screening is because you don't want to have to look at 100 charts. You want to be able to just cheat. So you flick on score, and there you go. I'm going to find something that's nice and calm. I happen to know that Polygon, it's a 4. It was a 5 yesterday. Okay, let's go with Quant. That's gone nuts. a London listed project. And in that case, you can see that I use the phrase listed. I don't mean listed. You don't list you as a token. That doesn't make sense.
Understood.
The longer term moving average is upward sloping in that case, price is above. The shorter term moving average is upward sloping, price is above. Last touch was a high, hence 5-star trend. Okay, and that's going to go to good old Bitcoin in US dollars. Forgive me. These things never work so well when you demo, do they? And we'll just and look at Bitcoin over the very long term. That's all the data we've got. And it's kind of obvious that a trend works, and you find a trend and you buy it, and things can keep going up. Doesn't have to happen that way, but statistically it definitely happens that way. And I should have cached the data before the call. This is what they call prior planning and preparation prevents piss poor performance. There we go. Right.
Wow,
now, there we go. 5 year. That's better. And I'll get rid of all the gubbins because you can't see it anyway. And if you just quite simply look at that trend, you know, basically, if you were long Bitcoin when there was lots of blue, that was probably a very good thing to do. And when the blue was disappearing, then that was probably a very good time to be a bit more cautious. And things can change quite quickly. But I think the power of this whole thing is the ability to screen, as I was showing earlier. And, you know, so you can look at the scores in dollars, and right now that's not very impressive because there's very little that's got a 5-star trend. And if I turn that the other way, there are no shortage of things that have a 0-star trend. I mean, loads of them. Solana, Cardano, all these ETH killers, these darlings of last year.
Yeah, exactly.
I wish we'll pick one at random. Should we? We'll pick Solana.
Solana, yeah.
And you know, just continues to be in a downtrend, which is sad to see. But anyway, so we can put that into the whole world into Bitcoin. So we look at Solana in Bitcoin, which is a bit like looking at a stock relative to the S&P 500. And it suddenly looks a bit more normal, but nevertheless, it's still a 0-star trend. And how I prefer to use this system is to put everything relative to Bitcoin or relative to ETH or relative to our own ByteTree crypto average, and then suddenly you can start to find the leadership. So these are the ones that are outperforming the most strongly, and then you've got the sort of 4 and 3 stars at the moment. Now, relative to Bitcoin, there aren't many because Bitcoin went up so much yesterday that it's actually knocked everything else down. But there are a few that have picked up overnight, which have got slightly stronger trends. Unfortunately, we've got some rubbish showing up like this. These are not serious investments. And that's always a bit of a shame when you see some strength there, because you know that the monkeys are in the room. And then these are the ones that have literally been downgrading recently. So quite a few. But because you can't reinterpret this information, which is why we've got ByteTrend. Okay.
Yeah, Charlie, just before you go to the breadth charts, one of the things I really enjoyed about the ByteTrend scores on there is that change since yesterday, right? Okay. Because you know, if everything's been doing pretty well, really kind of what I'm going to be after is, okay, well, what's jumped up a notch since yesterday? You know what I mean? I think it's just a great way of seeing where the opportunities lie. And in the same way, you know, I think you mentioned was it Polygon that notched down to 4, and maybe it was 5 yesterday. I mean, to me, it just kind of that could be a buying opportunity. Just you know, it's kind of just come off of its highs, and it may be more likely than not, you know, that notch from say 5 down to 4 could be due to, you know, just a little wiggle in that shorter term moving average slope, you know. So it just catches my attention, and to me, it just, you know, there's lots of ways of screening for opportunity with this tool.
Thank you, Jeff. Now, this bottom one, this long-term trend. So this is now Polygon in ETH. Now, obviously, Polygon's part of the ETH sphere. You know, it's one of the layer 2s, and so you've got this declining, the negatively sloping moving average, which is why it's not a 5. If that picked up, then it would be. I think that if we put it into BCA, and BCA is our unweighted average index for the top 100, unweighted, so it's uninvestable, but it's good as an indicator.
And it's a 5.
And then we get a 5 there, because you know, that's full of crap. There's lots and lots of crap in the BCA that's going down. All the stuff at the bottom is dragging it down. Not enough leadership. But we could surmise it all. Now, Jeff, perhaps you could tell everyone what's happening in our breadth chart, and I'll do it in dollars first, because it sounds like you've done your research.
Sure, sure. Okay, so let me see. So this is, let me see if I'm understanding this chart right. So this is the universe of cryptos, right, that you have within ByteTrend. So like the full list that I could find in the scores, I'm guessing.
100 coins, top 100.
Okay, top 100, great. So so top 100, and then we're in US dollars. So the yeah, most things are, you know, in that sort of zero, or which would, you guys would categorize as like a negative trend right now, I guess, right? And there's only a few sort of that are sort of outperforming and are on that sort of, what are we looking at, 1-2%, the ones that have 5 stars. So those could be your early leaders if we were to find some strength here. But you know, to me, it's telling me that the overall market, you know, as we're in US dollars, is down. But I really like the view. I know it's an easy way of seeing the entire market in one go.
Jeff, we're going to have you back. Saying all the right things, and we haven't sent you a check yet, but we probably ought to. So we've now taken this back to January 2018. We didn't have the full 100 in the first year or two, but nevertheless we had enough to make an indicator. And in white we've overlaid with the price of Bitcoin, and you know, there it is. You know, it's interesting. In May 2020, you had a lot of blue come through before the Bitcoin breakout,
right?
And there was that ghastly time in Q2 2021, and then basically the blue disappeared, apart from the sort of the hope rally in May. And but you know, you get that sort of understanding of where the market is, and we call it red skies. You know, scary red skies and lovely blue seas.
I like that. Yeah. And so we can look at this in Bitcoin, like relative to Bitcoin now as well, right? So we can see whether, you know, the breadth of the entire 100 cryptos that you're looking at, how they're doing compared to crypto, right? So anything that's in the blue, like those nice blue seas, those are the things that are outperforming compared to Bitcoin, right? And then
yeah, you've got it. You've got it.
Okay, great. Yeah. So you know, there are some there, but we are seeing a lot of red at the moment still.
So not many. And funny enough, normally you would tend to find lots of a sort of flight to quality angle about Bitcoin. So you could expect it to be quite blue in bear markets, like in 2018. Sorry, very red in bear markets in 2018, because it means not much stuff is outperforming. When the market goes crazy, like in Q1 2021, you know, Bitcoin, there's hardly anything that's not beating Bitcoin, Shiba Inu and all this kind of stuff. And so there you have it. It's just a very, very clear overlay of how the world works. And a traditional breadth chart, I mean, there are different ways of doing it. There's the advanced decline lines and things, but I've always looked at sort of 50 and, you know, percent of stocks above 50 and 200 days in TradFi. And we came up with this concept just because you know, that just wasn't enough. You just wanted to do a little bit more. And you really do get a sense of turning points by following this. And of course, let's zoom in a bit. And zoom into 1 year, and you can really start to feel the cycle, and over the past 6 months.
Yeah.
What's happening right now? What do you think that's happening right now?
It's a tricky one. I mean, there was one of the charts. I was gonna mention it to you. Maybe we could pull it up in a minute. I think it was ETH. It probably doesn't matter which one, but it was very apparent to me, well, from other charts as well, that we've been in this consolidation, right? We've just been squeezing in this sideways range. And if you're looking at, say, Bitcoin, like a Bitcoin price chart, you know, we've just been hovering around this 20,000 number for a while, right? Which was a strong sort of resistance level for a while. And then it became support. And now we've just been kind of stuck here on the way back. And one of the ways this was quite apparent was when we were zoomed in a bit and we were looking at the 20-day max and min, and you could see that those 20-day max and min lines just squeezed down. And now we started that breakout. So, you know, we've had a bit of, well, there's a bit of dollar weakness at the moment as well, even though I'm aware we're relative to Bitcoin here. But, you know, so we're seeing this little sort of boost. And so, you know, I'm just keeping my eye on things for, you know, potential early signs of breaks. And so that's got my attention.
And one of the charts that I can't show you yet, but we'll add to ByteTree at some point, is Bitcoin or crypto in NASDAQ. And, I think that it's a very exciting chart, because what you're seeing is, bad earnings from Microsoft and Google and those guys. And Bitcoin, you could argue it's part of the Feb 21 club, or you could argue that it's part of the autumn 21 club, but it didn't make a new high. So, you can make a reasonable case that the crypto was a Q1 hype peak. And for many coins that would be true. And so therefore, maybe it's time for little crypto to outperform big Nasdaq. So I think that's one of the thoughts I've had on that, and that's one of the charts I think is really important. Very exciting to see relative strength between asset classes.
Certainly. I mean, I think it's great what you guys have made available here for free, right, on your site, right? You can just jump in and you can get all of these scores and breadth charts just by going to ByteTree. And in the ETF side as well, I know we're talking crypto, but I found the ETF side interesting too, because now you can do relative strength compared to say like the S&P or one of the larger indexes, and try to figure out which areas are starting to lead or have been leading, for some time. And I'm sure we're going to see energy up there towards the top.
So you're guessing that energy is at the top?
Yeah, I may have had a sneaky look before we started. Yeah,
I think you might be right. Let's so that's relative. Because the problem with relative, of course, is if you have 1,000 ETFs, then and you have a quintile system, there's always 200 in the top relative quintile, basically.
Right.
But when you go to dollars, there are very few. And I think Jeff predicted there would be energy. But Jeff, come on, Turkey. Turkey, come on, energy or Turkey? What are you gonna choose? Here's Turkey.
Jeez, I wouldn't have guessed Turkey would be up there.
4 times earnings.
It's looking pretty good. I mean, it's kind of hard to argue with. My money right now is in energy. That's where I'm thinking. But yeah, I mean, I wouldn't have found Turkey if it weren't for searching through it in this sort of way. So yeah, very interesting.
And if Turkey does go up 100 times, it started here, right? I mean, I'm not saying it will, but it's a process of observing these things. Actually, one of the things I'm pretty interested in is biotech, because biotech peaked in 2015. And and the fact that it's being resilient in the bear market, and biotech's not healthcare. So we're not talking about boring healthcare, the big drug companies, which are just dividend payers. Yeah. This is the Nasdaq Biotech Index. And okay, so let's look at that relative to the world index.
Yeah, biotech can be pretty volatile, as you know, right? Because you've got, you'll have something will get approved, like FDA approved, or not, or there's a rumor about it, and then that whole index can move around pretty quickly. But yeah, it's certainly an exciting sector.
But of course, we're talking about ETFs, not stocks, and so when you've got loads of instruments, even
it smooths it out, doesn't it? Yeah.
Holdings having a bad day doesn't really make much difference. So that's one of the beauties of these instruments, is that you have, if things start going wrong, you've got time on your side, generally speaking. But that's a sort of reasonable change in trend, isn't it?
Yeah, certainly, and that's up to we're up to 5s on that. We've been there for a while, right?
Version 5.
Yeah,
it's good. Right, we'll park ByteTrend for a bit, and I want to talk to you about the work you're doing with Van Tharp. Now, I read one of his books. In fact, if I dug it out the shelf, it's probably a bit dusty because it was such a long time ago. It was hard going. I mean, it was really good, but it was hard going. I remember he talked a lot about position sizing and that sort of thing. So what are you doing with Van Tharp?
Yeah, so Van Tharp was pretty critical really to my career. I found one of my mentors, really, Dr. Ken Long, who was teaching a systems course at Van Tharp many years ago. It was the first time I went out to North Carolina. That's where the Van Tharp Institute is. I've been out there quite a few times since. So these guys do all kinds of courses. We unfortunately lost Van Tharp earlier this year, so back in February. So he's not with us anymore, but his institution lives on. And myself and a colleague, Bill Scheit out of the States, we work together quite a lot. And we've been developing systems. We build algorithmic systems as Rfactory, and we've partnered up with Bill to do some other systems. And specifically, it's one that was originally designed for crypto, and we call it PRX. And so it's a PRX crypto system, but it's not limited to crypto. It was just originally designed for it because we wanted a way, like a simple, robust way to take advantage of these big trends that we're seeing in crypto. And so we've formalized this. We put a workshop together, and we're honored to be partnering with the guys at the Van Tharp Institute to deliver this. It's a course that's coming up in November. I think it's the 12th. It's a one-day course. We're going to tell everybody all about the system. And then we've also got indicators and automated strategies available, which make it A, so you can back test it, and B, so that you can hook all the plumbing up and just automate it yourself. So
what's
we're
the
pretty
frequency
excited about that.
What's the sort of turnover frequency? Are you talking about intraday data? Are you talking about end of day data? What are you doing?
Good question. Yeah. So originally we designed it around end of day data. And we designed it with guys in the US in mind, because Bill was in the US. And now the US are pretty restricted on what they can do in crypto, right? The regulations for those guys are kind of, it's a bit over the top in my book. So they're like long only. And so we designed it originally for long only. But we've been exploring shorts. And originally it was end of day. So, you know, swing trading sort of idea. But as we've been doing all of the research, you know, it turns out that it's pretty fractal. So longer than that works weekly. And then we've been doing a lot of work on the intraday side. And then the only thing you got to balance on intraday is what you always have to balance with automated systems. And that's like the weighing up the costs versus the outcomes, right? So don't underestimate, you know, what the slippage and the execution costs might end up being. And then there's a few ways that you can squeeze those down. But we've seen some really good results on the intraday side. The nice thing is you get so many more trades, especially as we've been sort of in this downtrend recently that we looked at in crypto. Well, number one, there's a lot of opportunity, even on the little upside, you know, in crypto when we get those sort of bear market rallies. And also, you know, why not take advantage of the short side too? So yeah, we've been covering both.
Yeah, I mean, my view on shorting is, well, A, it's difficult, but B, everyone knows that. But the thing about crypto is, so the volatility must make it pretty scary to be a short seller in crypto.
Yeah. I mean, yeah, it's interesting. You know, we cap our risk. So, you know, you're familiar with the Van Tharp book. There's a concept of R. That's why our company is called Rfactory. R is essentially return, right? But it's also reward. And the way we look at it is we want to build a factory that produces these R multiples, right? These little boxes of R. That's how I look at it. And but you need something to get into one side of the factory, right? There's a raw material that goes in that side. So that's risk, another R. So risk goes in one side, and then hopefully the return comes out the other side. And as long as we're keeping a cap on that risk, then I'm less concerned about it just kind of going totally awry on us when we're short crypto for typically short periods of time anyway.
Sure. What do you think is most important? The buy signal, the sell signal, the position size, the instrument you're trading? What do you think? How would you rate those factors in order?
Yeah, that's interesting. Yeah. I'm
a Van Tharp. That's a hard question. You're on the spot.
I've drank the Van Tharp Kool-Aid, and so position size is pretty important. So we do a lot of sort of like somewhat dynamic position sizing on it. And you know, I think entries are probably less important than most people think. And it's more about exits. So if I had to rank all of those, I'd probably say position size, super important. Exits, more important than the entries, and then entries after that.
Yeah, interesting. Very, you know, you sort of always turned it around from conventional thinking.
Yeah,
that's a trader's hat as opposed to a long-term investor's hat.
Probably is. Yeah,
choosing instruments the most important thing.
So Charlie, I haven't really talked to you about this, but within the system that we've done, this PRX system, I got intrigued when I was sort of doing some research into this ByteTrend idea, and it's kind of similar to some filters that we were using and we're experimenting with PRX. So I built the ByteTrend the ByteTrend algorithm into the code and use it as a filter, because, you know, we've done some simple filtering just using things like the 200-day moving average. And I'll tell you what, it works pretty well. And now I got to check it out with the 280, because now that's going to make a lot more sense. But we did it even with the ByteTree, you know, that whole star rating, right, 0 to 5, and then how to play around with that. So if I filter out all of the trades with that ByteTree trend as a filter, and really interesting. And so one of the most important things I've seen so far, I could share my screen, but I don't want to go off piste. is essentially that if you just remove the zeros, right? If you just get rid of when it's really downtrending, it massively improves results.
So you're absolutely right. I mean, I think that the way I like to describe it, if we're going to go into the slightly more advanced chat, is 1 to 4 doesn't really mean anything. It's just noise. It just means neutral. Right. And the 5s and 0s are in regime. They're in play. And that's when the way to really milk this is, even for the fancy high-speed traders, is to literally only say, as soon as something's 5, play. The rest of the time, don't. And on the short side, 0, play. Or long short, but just they're in play. You expect moves in all sorts of directions. And if it's 1 to 4, just ignore. Then you've already had a more efficient use of your capital. And look at some of the CTAs, the best CTAs in the world. The best CTAs are the ones in the world are the simple ones.
Yeah.
And I'll name Mulvaney, although that's of course not an investment recommendation. I've written about it in the past, a few times actually. It's an amazing fund. It's done extraordinarily well this year. I think it's up like 4-fold the last couple of years. Just in the normal, no crypto, I don't think. Well, you might do, I don't know. But it's in bonds and equities and currencies and stuff. Yeah. And they just do 6-month relative 6-month highs and lows.
Right.
With position sizing algorithms.
Sure.
It probably comes straight out of the Van Tharp textbook.
Yeah, and I tell you what, those sort of classic CTA style trend following funds are having a fantastic year. Like, there's some record breaking years by a lot of those guys. So yeah, I mean, that.
But it's been 10 years waiting. I mean,
there was a lull for sure.
Everyone took their money back because they peaked in around 2009, and maybe some of them went on a bit longer because there's a bit of fun to be had. Yeah. And there was another burst of activity in 2014, wasn't there, with the oil crash and stuff. But other than that, they've had, most of them, no returns for 10 years.
Yeah.
So the solution is that these guys, they hire more clever people, PhDs and clever computer people, make the system shorter term, faster, and they just lose more money.
That's it. Yeah.
The guys that sit there and say, "I'll just wait the 10 years until the market comes to me," and the ones that clean up. And the 20-year IRR of a fund like Mulvaney is 3 times the Nasdaq over the last 22 years.
Wow, I didn't know that. Yeah, and that's saying something, right? And it's often uncorrelated to the equities as well, right? Those returns.
It's a diversifier. It's trend following, if applied properly, is a wonderful strategy. And what we're talking about in ByteTrend is the 2 kinds of trend following, as I understand it. Trend following, which is in absolute terms, which is breakout 0 and 5, and then relative strength. When you take the whole thing relative to Bitcoin, then you start to look for leadership. And it's a completely different. So when we talk about CTA, they're doing the first one. They're doing the absolute return. They're looking for copper to make a 6-month new high, or the pound to make a 6-month new low, or something like that, and then just to go with it. Whereas the relative strength is very much what we call the equity momentum, like the momentum factor of funds and stuff. And they're just saying, well, who's beating the market? We'll knock out the ups and downs because we're looking at it relative to the market. And that's 2 very different things, but both are fascinating. And I think that anyone who ignores one or both is missing a big trick, because this is very, very important information in markets.
I think so too. And you know what? As I was looking through, ByteTrend with the scoring and the breadth charts, it struck me that just using that tool, you could actually construct like a portfolio rebalanced portfolio system for yourself, right? You could pick a selection of ETFs, and then you could rebalance them based on that ByteTrend. And now, because that's going to be the relative momentum. And then, so those are the things that are doing well. And, we know that, with momentum, objects in motion tend to stay in motion, right? So, money going into something, if something's doing well, it tends to continue doing well, at least for a while, and then it'll probably slowly back off as something else sort of takes over. And then if you're rebalancing maybe monthly or even weekly, you could probably do quite well with that. And I reckon you could probably do it just using the ByteTrend data that you guys have on the site.
Thank you, Jeff. Once again, the check's getting bigger. One of the reasons I've done it this way rather than traditional momentum really doesn't like bear markets, because you'll get something that's defensive that will start to outperform. but then you get the snap, what I call the momentum crash on the other side. So when the market finally turns, you get absolutely destroyed. And that's always one of the big issues. And particularly in bear markets, when things speed up, if you're going to look back over the last year and say the stuff that went up the most, I'm going to buy that. Well, there are times in the cycle that really works. There are times in the cycle that really doesn't work. We're not pushing it to that degree. We're just saying, what does the regime look like today? And so, something can be doing quite well in ByteTrend that hasn't even gone up much.
Right.
It depends on various things, and it depends whether the underlying that you're measuring it against has done very well or very badly. But it's just taking all these things and just saying, let's increase the probabilities of finding something interesting. So on the ETF side, Jeff, obviously there's too many ETFs on that list. I mean, which ones do you not put in? But we're going to have lots of flags. We're going to improve the daily delta to the probably the weekly delta and add that in as well. And but I think that the thing I'm quite excited about are the flags. So we're going to have half a dozen flags or more. One of the flags will be boring. And if it's boring, you press the button, and all the boring ones just disappear.
Okay, and I get you.
Sort of my old firm, HSBC, ESG, World, or something. It's just boring.
Gotcha.
Okay, yeah. And so we'll get down the list. We can cut down the list by about 2/3 just by getting the repetitive products.
Yeah.
And so forth. So we just want to try and have. I wasn't being rude about my old bank. I thought they wouldn't mind the joke. Then I thought I just wanted to have all the interesting ones. So you definitely want the themes, even though they're quite small. So the blockchain stocks and the sort of hydrogen stocks and all that fun stuff. So you want to be able to pick up themes quite easily. And then we might have a volatility filter. We might have some geography filters, large, small, whatever. And so hopefully you can sort of get a decent picture of what the hell's going on in the world. Obviously, the end game is to put all the stocks in. But I think there's something about stocks is that, I do have a system privately that does that for stocks.
Yeah.
But I think that, there's regulatory problems with permissioning and so forth. But it's also that their stocks are much crazier.
Yeah, and I think what you were saying, like one of those flags, an interesting one for me would be, just sector, right? So it's almost like just, pull out like the sector ETFs, the big ones, and now let me compare those relative to the FTSE or All World or whatever it might be, right? And now I get to say, okay, well, what sectors are starting to move, because those are cyclical anyway, right? So bear markets, we're going to see things like utilities and high dividend paying things, probably at the top, and then the hated ones, that don't like high rates, like tech, and they're going to be at the bottom. But then we'll see that start to reverse, and then that just gives you that sort of early heads up. So yeah, that would be really interesting. Yeah,
I think you've actually just told us what we're about to build. So we're going to have sort of sectors and countries, including the EMs, and we're going to have sort of FX and commodities. So you really go to a page and just say, well, my little CTA, and. Right. And what do you do today? Look for the 5s, look for the 0s, go play.
Yeah. Fantastic. I think it's a great tool.
Good stuff. Well, any final thoughts from you, Jeff? You've told us about R Square. Could people go and find you somewhere or follow you? Or
Yeah. So rfactory.io. So that's letter R, word factory.io is the website.
We'll magically put it on the screen like that.
Okay. So yeah, that'd be great. I am on Twitter. I'm more of a Twitter voyeur, but I'm trying to change that. So at Jeff Boccaccio on Twitter, and LinkedIn, I'm committed to making that useful again. I've been on a LinkedIn hiatus, if you can believe it. People do that. But yeah, I'm updating all of that now because I've seen the power of it through yourself and some of our peers at the STA. And if I could give a final plug for the STA, technicalanalysts.com, it's a not-for-profit organization that is looking to just instill technical analysis education. And there are, the gold standard for courses. If you want to know technical analysis, this is the place to go. There's a home study course. There are in-person or at least Zoom live courses, and there's professional qualifications available. So also, you can be a member just for a small amount of money. I think it's $75, and it's maybe 75 pounds, maybe even 25 pounds for a student. And so we love when the students come in too. And, we've got all kinds of benefits just for those guys. So one of them is the monthly meetings, as you know. And, we've got Larry Williams coming up. And it's going to be a fireside chat with me. I'm fortunate enough to talk to Larry. And so we're super excited about that one. We're actually making that open, I think, to everyone. So would encourage everybody to go check it out. You can register, I think, at technicalanalyst.com and come join the conversation there.
Yeah, well, I'll second that. I mean, the STA has been great to me. I did my course back in 1998, I think. God, that shows my age. I got a distinction, Jeff. I got a distinction. And I think that the point is, if you're known about technical analysis, do it properly. Because people just jump on, see a chart on the internet, and then just make up nonsense, make it shorter and shorter and shorter term. It's telling you precisely nothing.
Right.
And so I think to have some of the backgrounds and theories. People approach it in many different ways. Basically, it's the analysis of price, but price tells you a lot. You get trends, you get reversions, you get volatilities. You get volume probably comes into it as well. So it's basically interpreting market information. As opposed to what people tend to call fundamental or valuation principles or future forecasting or what have you. And the market tells you a lot. I mean, it's crazy to think that it doesn't. So I've always been a fan. And of course, we have another publication on ByteTree called the Adaptive Allocation Alert, written by Robert Griffiths and Raj Sohn, who were STA people as well.
That's right.
So there's a bit of heritage there.
Certainly.
Yeah, but the course is excellent, as are the meetings. You get free drinks, and these days you can find women there. I mean, it's not just a bunch of blokes.
It's amazing. Yeah. We certainly want as many people to come along as possible. It's great when you meet up in person, because there's so much Zoom stuff that happens these days. The in-person meetings are just a lot of fun, and like you said, there's free drinks there too. So encourage everybody to come along. And and so the other side, from an Rfactory point of view, if you check out rfactory.io, the PRX system is available on there, and that's via the Van Tharp friends. If you want a really simple way to get involved with crypto, you don't have to know anything about crypto, really. If you do, it's a bonus. And then, you can take it as far as you want, right? It's a system that you can use and trade yourself manually. It's a system that you can automate, and sort of everything in between. So
which coins do you do, by the way? Is it Bitcoin centric, or is it lots of coins?
We talk a lot about Bitcoin, Ether, the big ones, but we've also been running the same system on a basket of altcoins. I think there were like 86 of them in there. And it performs very well, just basically across all the altcoins. So in a way, that's how you can try to catch those early outliers, the ones that might be just outperforming, and then they really start to take off, and you can get small risk on and get these really large returns out of those guys when they go. And so those are working really well, and we've got some interesting filters for that as well, with using some of the broader crypto world as filters, so that you're not just trying to catch these breakouts when there's actually nothing happening. But yeah, I mean, there's all kinds of opportunity, and there's more and more coins becoming available. Too many probably, but there's just more things that we can sort of sink our teeth into. So yeah, we're really excited about where that's going to go.
On that note, I mean, I don't know how many coins there are, but we say 20,000 plus, and we've given up ad counting.
Wow.
We think 99% are worth zero. But
Yeah.
we're on the hunt. We're on the hunt for the next Amazons and Googles.
Yeah,
and that's what it's always about. Just like .com, same thing. From a market's perspective, same thing, repeat.
That's it.
Jeff Boccaccio, thank you very much for your time. Pleasure having you on the show.
Thanks, Charlie. Really had a lot of fun. So thanks for having me.